Hey guys, hope everyone having a great day. It was an incredible day in the markets. From a day trading standpoint, we're coming into the earning period, and earning periods is I get extremely busy at earning periods. I almost have to turn off my social media at least in the morning and totally focus on my trading because that's where I make 80% of my money, which I do for a living. So I want to just wanted to get everyone ready for that because we have some few newcomers, so they know what to expect. But incredible day in the day trading room, and an alert service. And I wanted to kind of walk you through a trade and how to trade earning gaps. Hopefully you'll find this valuable and educational. But let's talk about so basically this is how it works. So I took a screenshot and I'll go over that with you. Um, Let's see. Okay, so here we go. At 6:28 my time, so I'm up at 5:30 in the morning, and Monday we'll do a lesson of a morning routine. I've already done that, but I'll do it again. So I sent out the alerts, FTCH, EKSO, RAD. Those are my favorite watches. Cure and KBH, and I'll talk about KBH a little bit later. And then here comes the alert. FTCH, it's a trade plan, long over $17. Stop at 1650, target at 1750. Now, those of you who are on social media or following me on StockTwits, you can probably go see this trade right here on how this worked, and I'll just blow it up a little bit so you can see it. But it truly was a really, really good play. What you can see here is, and I'm going to walk you through this trade. This was taken on a 2 minutes chart, and let me pull up. This is the chart right here. This is the daily chart, and it's a tier one gap. And I'm going to give you a little bit of a lesson. Those of you who like to do day trading, this is your daily chart, and you have one red bar and two red bar, and this is within the base. So what you have here is a shock value. That's what you have. So this is clearing resistance, and it comes in and blasts off, and you have nothing really else. So this is probably one of the most potent gaps that there are. And when you have these gaps, you just got to back up the truck, and when it's working, you just got to keep pressing the button. If you look at, I have 1, 2, 3, 4, 5, 6 buys. I have 1, 2, 3 sell. So when I was selling, I'm buying back. I'm selling, I'm buying back on a pullback, and finally I sold it at 17.98. So that was the target between 17.50 and $18. And as always said, the taking target is super personal. So want to make sure that I go over this trade, and then we did the we did rad. The alert went out for rad for 14.97 and 14.47. Now I gave it a little bit of honestly I gave it a little bit rad on the daily chart. I gave it a little bit more bigger stop than I wanted to on rad, but this is probably the right thing to do the way the volatility has been. But it worked. Look at this. If you look at how the rad worked out, the rad target was 1550. Look at this 1629. I know some of the guys held it end of day, but this was just a awesome day, an awesome day trade. And this too came on a 5 minutes chart, and I'll walk you through it. I personally only trade on, like to trade only 1 minute, 5 minutes chart, but when I have a tier one gap, I really go to 1 or 2 minutes chart and I trade it. I trade on that chart. But this one, I wanted to kind of walk you through this and how the gaps work. Look at this. What's happening here? This is like breaking the downtrend, right? So you breaking the downtrend. Now this doesn't have as much shock value as we saw in FTCH. So this becomes your tier two gap, and tier two gap means you can't really enter right off the bat. And look at this. You'll see this. You recognize this pattern. It's just a big, pennant right here. So this breaking this, and then you had, buying came in yesterday. And as you guys know, I love the hourly chart. So when I overlay the hourly chart, we had a nice base here on the hourly chart. It's over the base, and we just needed on the tier two gap. What I really like is I like to see I like to see an entry on a 5 minute chart pullback, and then maybe an opening range play here. And those that been trading with me or have traded with me in the trading room to understand the trading room um, mastery that I've taught for many times. So this is my a go pattern. I call it a go pattern. This is also opening range, and it's just super simple. It's nothing about me, nothing magical about it. It's basically you have first 5 minutes bar, and then just 5 minutes bar, second bar within the 5 minutes, third bar within the 5 minutes, fourth bar within the 5 minutes. And what you're looking at 1497 as an entry. So we right here, right over here, you see what I'm doing. So I'm watching this as it's materializing, and I said, okay, I am going to anticipate this because filling on the 15 even number is going to be tough. As you saw that even on the FTCH, you had to a little bit anticipate, and I'll bring the FTCH for you guys to kind of see it, and I have it right here, and you can see what happened. I'll bring the RAD as well, right here, so you can see FTC. This is and you have, I mean, 1698, and you kind of have to watch as you're watching the level two, and once it's hit, 1698 and 17, and I got filled at 1703. So that's not too bad, as far as how you get into the trade. But on this one, you just have to a little bit, give it a room a little bit, and sometime you have to anticipate. But this is a 5 minutes opening range play right here. So this right here is a truly 5 minutes opening range play, and this is your stop right here. So we talked about 1497 by 1447. You could have played it right here, which would be 1460. You would have share sized it a little bit better, and that would have been awesome if we would have share sized it better. And then you have a breakout bar out of the opening range, and then breakout bar has a pause right here. So that was your opportunity to add to the trade, move the whole stop for the whole position. So let's say you're trading with, let's say it was a 200 shares, $100 risk trade, right? And keep it simple. So let's say it was a $200 risk, 50 cent stop, and now you have an opportunity to add to it at $15.45, and then stop would have been $15.20. Right over here, so it'll be $15.15. So you would have had what, 30 cent stop. So you could have added, because from 1497 to 1515, you got a 15 cents, and you can finance this straight with this. So add 200 shares, add, and reduce stop. So this is already in money for 13 cents, or let's say, I'm sorry, 15 cents. And then this one, you are taking a 30 cents risk, 15 cents you're financing. So your total risk on the trade is only 15 cents. And that's how you really tier. And you saw my FTCH and how I did that. So boom, it pops right here. It pops into this area at 16, 18. And that's where most everyone takes their profit here. So sometime I send the trade plan, and the trade plan, and I always say that profit taking is very personal, but most importantly, we gotta follow what we do. Um, and that is my trade on red here. So that is my trade on red. So I had a pretty good position size wise. Oh, what I did, it was, I enter at 1442. I enter 1442. So this is right here, 1492, I'm sorry, and 1551 is my exit on the rat trade. So you can see how just one buy, and one sell. So 1492 by 1551. So beautiful trade here. And then this one also had an opportunity for you to add, because where the breakout happened right here, where the pause was, then you had an opportunity to add to it. So that's how the level two gaps work. Level two gaps, and this is how it works. So hopefully this gives you some opportunity to look at some how do we play the level two gap. So let's take a look at the market as we are approaching Friday here, and see what Q's had a really nice day, reversal bar, bullish reversal, trying to get back to this trend line, and I probably didn't do a very good job drawing this trend line, but you as you know now we're touching, so trend line becomes, hey, three touches here. So we've got one touch, second touch, third touch. So it's right at trend line, which is right at the 21 period moving average. So it bounced off a 21 period moving average, and it's just looking really really bullish if it breaks out here. And we added a couple position, and we'll go over this. But when you really look at what's happening with the Qs. I mean, Qs had just this unprecedented run right here, and then you had that one pullback in 28, small pullback. And if you really look at it for this many months, right? 1, 2, 3, 4, 5, 6, 7, almost 7 months, we consolidated sideways. So after 7 months, we finally broke out of that range, 200. We went up right here. That correction was not needed because there was enough consolidation. And those of you who are trading with me, I look at these charts very carefully. And even 2018, when that happened, we got long right here, and then we really never looked back. So right over here, you had really, I mean, if you look at it, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, because it never really took out the lows, 13, 14, 15. So it's about 20 months, almost 2 years that we stayed in the range in the Qs. So 2 years, you can say, okay, that's where we were for the 2 years. So we were right around 155 to 200, so 50 points range, and that should be easily able to take us to 255 measure move, and that's where we were headed. So this right here, if you think the double bottom is happening, I already outlined some of the bullet points and what needs to happen. I mean, we ain't coming back anytime soon unless there are some black swan events that would happen. I mean, I just don't think that we are going to see any type of a pullback here. Not pullback, but I mean, a pullback will be nice, but I don't think there's going to be any massive or sizable correction here. And in order for that to happen, in order for the market to really turn bearish, then some of those bullet points that I talked about, that we got to have coronavirus rate, coronavirus infection rate, that they're going up 30 straight. Okay, check. But do we have the death toll that's going up? No. Do we have hospitalization that's going up and causing an emergency again? No. Do we have any state on the verge of shutting down? Well, that's not going to happen because states are going to be more vigilant. They're going to do more. They're going to do their due diligence to make sure the state shutdown never happens. Are the feds out of money? No. So, and the dollar keeps falling, and the dollar keeps falling while the yuan grows in demand. So those have to happen, and that's not happening. And then civil unrest has subsided now, and things are starting to get really, it has been starting to get better, and there are no wars on the horizon as far as the globally. So there's no global unrest. There's, obviously there was an epidemic within the pandemic with civil unrest, and now that has subsided. So everything looks good from market standpoint, and market is an indicator of a forward forecast, what's going to happen with the economy. So we got long couple of names. Let's take a look at the SPYs and see what the SPYs are doing. Right, bounced right off the 200 period moving average today. That's the really, that's the only thing that's kind of in a suspect. But I think if we take out the red bar from yesterday, I feel much better on SPYs. I'm a big proponent of how we do it on the hourly chart and Qs. Let me go back to the Qs, and I think I talked about in my daily newsletter last night that Qs, once they get above the 21 period moving average, I get super bullish. And I really like the way that we close on Qs. And these are predetermined lines on my chart. And I really, live and die by these lines. So SPY has to, SPY has to take this, if they take out this bar, and then I think we go higher today. We did see some action in XLF, so financial came back strong. JPM was strong. Goldman Sachs was strong. There's no technical patterns that are remotely exciting in any of those financials, so I am staying away from financials. So nothing here, but here, well, there's one name. I actually have this RLMD that we talked about that was on our list, over $50 breakout, and I took it off, and guess what? it broke out to 54. So, I don't know, and it closed right at 50. So don't like the close. I had a position. I trimmed that position in half, and I have a small position left in RLMD, but I'm okay with that small position, and we'll see how that I will see how that works, how that goes as far as RLMD. The other one that I brought to your attention that really had a good day, and I actually put the order, uh, I put the order a couple of days ago on PTGX, and PTGX popped nicely as well. The entry was 18. So those of you who are watching the unofficial play, some of these unofficial plays are really, really solid plays and went to 18 as high as 1950. So you had a nice 15% pop here in PTGX as well. Now let's take a look at the portfolio. I have Amazon, and I have Amazon in my account where I'm holding this, and I am a long-term bull on this Amazon position. Obviously, that eats up even at 10% position that I'm carrying on this. It eats up quite a bit. So I like to trade Amazon for a longer term. Those of you who just joined, or those of you who remember right after the March bottom, we got long right here on Amazon, and we rode it all the way up here on Amazon. So we had a nice little trade, not nice little, but really nice trade from 2100 to 2500. I think it was 2480. That was our exit. I have to go back and look. And then after that, it just, it was in this area, and we got long again, and most of you are in this trade already. So Amazon, and that's the only one that I held, and I did not exit this trade because I like to have my um, runners continue to run. One trade that I thought about it, and I really gave it a thought of whether I exit or whether I keep it. It's right there where we entered the first time at 1047. It's finished. It closed at 1048. Had a really nice close yesterday as well, but I just didn't like the market price action yesterday, so I closed it. And and then we have TWLO, Twilio, and Twilio is also looking very good. I'm going to add it over the $220. I'm going to add a couple, 3% of the position, and now it's stair stepping higher. I love this base. This is about to break out, and that's going to pay us nicely. And then I am probably going to get a lot of hate mail either tonight or tomorrow morning on pizza. You know why? WTF, why you exited this trade if you're going to re-enter at a higher prices. And you can give me that, and I can tell you that I did not like the price action yesterday. I do like the price action, and overall, I just absolutely love this pattern. I mean, you see the weekly chart next to it. I'm showing the weekly chart. The weekly chart is just basing, and it's getting ready to break out. I personally have an order for pizza. I'm not sure if I can see. Let me see if I have here. Um, yeah, I don't think it shows here the pizza, but I have an order for pizza this is my, obviously these are our entries. We added IBB into this account. We added pizza. I have RLMD into this account. And I'm gonna add to pizza trade over 85 because when it breaks, it's gonna break. So if you looking to uh, add to your position or taking a brand new position and want to wait till 85, then that's what you're gonna do. And this time, I am going to just let this one stop me out at 80, just like Tech on my account. I have Tech you know that finally put a reversal bar here, and then it's penetrated almost 75% into the red bar. So once red bar gets engulfed, then we have a firm conviction from the bulls that they are in control. I really, really like this. And this is a little bit thin on a thin side, so you got to be careful from share sizing. But 10% position is a 10% position, and it's really nice flagging right here, and it's kind of building your it's kind of building your handle right here in this cup. That's your handle. So it's building that, building the handle. So I really like that. And now somebody made a really good point that for the small account, what you do, and we got into this IBB trade, which I absolutely love. Came back to the 10-period moving average and the back to the base right here. I like this trade, and we got into this trade and I'm looking for about 150, 160 as targets. If instead, the proxy to IBB is Labu, and you could play Labu, and obviously it moves like 3 times versus IBB, and they both track the both biotech indexes. So that's what I have for you. As for today, I have some plays that I will identify as official and maybe unofficial. And for that, I will let you read the newsletter tonight. So have a great rest of the night, and I will see you in the markets tomorrow.